The next weapon of mass disruption isn't a new app. It's not AI hype. It's not a meme coin. It's a handful of boring rocks, and almost nobody is paying attention. While the internet argues about the next digital narrative, veteran investor Chen Lin says we've quietly entered a once-in-a-lifetime super cycle in commodities, one that could flip the global financial system on its head and hand early investors the biggest gains of their lives. And the craziest part? This entire shift is being driven by the very technology everyone thinks will replace physical assets. Here's what we're doing today. First, I'll show you why AI, robots, and drones don't actually run on code or magic. They run on metals. Then we'll break down why governments are suddenly treating silver like a strategic weapon, what China is about to do on April 1st, and why that single date could shock prices. After that, we'll talk about the curse-crushing junior miners, why that pain could turn into 10x upside, and how Chen himself is trading this setup not theory, not hype, but an actual plan. Because once you see how all these pieces lock together, it becomes very hard to unsee. The super cycle of commodities. Let's start with a big claim. Chen says we're not in a normal bull market for commodities. We're in a super cycle. That means a long, powerful wave where demand keeps outrunning supply across multiple metals at the same time for years, not months. His core idea is simple. For most of human history, the people who controlled knowledge and brain power ran the world. But now, for the first time ever, we're building machines that can copy a lot of that intelligence. AI can write, it can design, it can manage parts of factories. It can replace white-collar tasks that once felt untouchable. You can clone intelligence. What you can't clone is copper, or silver, or lithium. Those have to be found, drilled, dug, processed, and refined in the real world with real time, real money, and real limits. So while everyone online chases the next virtual trade, Chen is saying the best AI trade might actually be old school, mining and hard assets. Because every robot, every drone, every data center is basically a pile of metals with a brain inside. The metal reality behind AI, robots, and war. Zoom out and look at what's happening right now. Military drones in Ukraine and the Middle East are flying by the thousands. Future warfare is openly being discussed in terms of millions, even billions of autonomous drones and robots. AI data centers are being built at record speed, sucking power, copper, and silver like there's no tomorrow. At the same time, the energy transition is turning metals into the new oil. Solar, batteries, electric vehicles, grid upgrades. All of it stacks on top of normal industrial demand. And here's the problem. We're doing all of this after a decade where mining investment was crushed. Big discoveries were rare. Projects were delayed. Budgets were slashed. That mismatch, exploding demand, meeting tight supply is exactly where super cycles are born. Why silver just became weapon grade. Out of all the metals Chen talks about, one stands above the rest. Silver. Most people still think of silver as a shiny coin or a bar in a safe. But today, silver is a 3-in-1 asset. It's an industrial metal used in chips, solar panels, EVs, and electronics. It's a critical metal, essential for national security and advanced tech. And it's a monetary metal, used as money for thousands of years. Here's the part that should make you sit up. Both the United States and China recently added silver to their official critical metals lists almost at the same time. That's not random. When governments label something critical, it means they're worried about supply, and silver supply is already tight. Each robot, each drone, each chip uses only a tiny amount of silver, but multiply tiny by millions and billions, and you hit a wall. There simply isn't enough new silver coming out of the ground at current prices to meet future demand. Why $100 silver isn't crazy anymore. Chen breaks silver down into layers. As a purely industrial metal, He thinks silver is already expensive, maybe even stretched. But as a critical metal, something governments need to secure and stockpile, he sees around $100 an ounce as a realistic upper band. And if silver ever gets pushed back toward being money again, if a major country truly monetizes it, then triple-digit silver might not be a spike. It could last. That's the difference between a good trade and a world-changing one. Now add this twist. China controls more than half of global silver refining capacity through its smelters. A huge amount of mined silver from around the world ends up being processed in China. So even if China doesn't own every mine, it controls a massive choke point in the supply chain. And recently, Beijing told silver exporters they must register with the government. That sounds boring, but it gives them a lever. If tensions spike, exports can tighten overnight. Silver becomes a bullet in an economic war loaded, waiting. The April first-time bomb. Nobody is watching. Now let's talk about a date almost nobody outside this niche is paying attention to. April 1st, 2026. On that day, China is removing VAT export rebates on solar products and roughly 249 other categories. For years, these rebates made Chinese solar exports cheaper overseas. That subsidy is going away. And that matters a lot for silver. Solar panels are one of the largest sources of silver demand on Earth. Each panel uses a small amount, but the total volume is massive. When China says, from April 1st, we're not refunding that 13% VAT anymore, it means exporting solar suddenly gets more expensive. So what are manufacturers doing? They're front-loading production. They're rushing to ship as much as possible before the deadline, which means silver demand is being pulled forward into early 2026 instead of spread across the year. Chen sees this as a pressure cooker. Short-term, physical silver demand spikes as factories rush orders. Silver locked into panels is gone from the market for decades. After that, production may slow and tech may adjust, but the damage to supply is already done. That April window could be the ignition point where tight supply meets forced demand at scale. The copper crisis hiding in plain sight. Silver isn't alone. Copper is the quiet giant in this story. Think about what copper touches. Every power grid upgrade, every EV charger, every data center, every transformer, every AI server rack. The energy transition alone is driving massive copper demand. S&P Global estimates that about half of copper demand growth through 2040 comes from energy transition, with AI data centers adding even more. And that's before government stockpiling. Once a metal is labeled critical, the next step is obvious. Buy it, hoard it, secure it. The U.S. has already said it wants to stockpile critical minerals. Chen believes China, the EU, and others are doing the same quietly. That kind of demand doesn't show up neatly in forecasts. But when governments start competing with industry for the same metal, shortages can flip fast. From Trudeau's curse to 10x potential. So with all this demand, mining stocks should be flying, right? Not exactly. For junior miners, especially in Canada, the last decade has been brutal. Chen jokingly calls it the curse of Trudeau. Chinese capital has been restricted from investing in Canadian mining assets, especially strategic metals. That cut off a major funding source for early-stage projects. Some juniors had one serious buyer, often Chinese, and when deals were blocked, their stocks collapsed 90 to 99% and went dormant. At the same time, similar projects in Australia trade at roughly 10 times the valuation. So Canadian juniors sit there, cheap, ignored, and hated. That's the pain. The setup is the flip side. If policy shifts even slightly, and global capital can compete again, bidding wars can happen fast. If valuations simply re-rate toward Australian levels, Chen thinks 10x moves are possible before the supercycle even peaks. What feels late to retail investors may just be a move back to fair value. How Chen is actually trading this. Now let's talk real tactics. not theories, not slogans. Chen isn't betting everything on one roll of the dice. He's layering. He owns core positions in junior miners he believes can survive volatility. He's used call options selectively, with some going 5 to 10x as the market woke up. He's traded silver futures, scaling out on runs while keeping exposure for a possible explosive move higher. He talks openly about selling portions at extreme levels, not because he doesn't believe, but because risk management matters. This isn't gambling. It's structured exposure to a theme that could reshape markets. The risk nobody can hedge. Now for the uncomfortable truth. A lot of this thesis rests on rising global tension. More drones, more stockpiling, more just-in-case behavior. If conflict escalates, metals don't just rise, they can break markets. Exports get banned. Taxes appear overnight. Rules change mid-game. The risk isn't just prices going down. It's prices going up in ways that destroy bad plans. Chen's answer isn't maximum leverage. It's position sizing, optionality, and owning assets that can survive chaos. The real divide. Real assets, these fake comfort. Here's the key moment. AI is making it easier than ever to create things that look valuable but aren't scarce. Tokens, memes. AI generated everything. You can spin up a new narrative in 5 minutes, but when grids fail, factories run nonstop, and wars turn hot, none of that matters without metal in the ground. You can fake stories. You can't fake tons of silver and copper. That's the heart of this supercycle. The question isn't whether metals matter, it's how early and how smart you choose to be. What this all means: we're potentially entering a period where AI, energy, and military tech all compete for the same metals. Silver has been quietly upgraded to a strategic asset, with China controlling a key choke point and a tax shift on April 1st that could shock demand. Copper sits at the center of power, data, and national security, with deficits building. Junior miners are beaten down, hated, and mispriced, which is exactly how big upside is born. And the people paying attention now won't be chasing later. If you have thoughts on today's topic or something you'd like me to dig deeper into, feel free to leave a comment. I always appreciate the conversation. And if you got value from this, tap like, subscribe to the channel, and hit the alert bell so you're here for the next breakdown. See you next time.